everyone, it's Amit. So in this video, what I wanted to talk about are some of the 2020 tax planning strategies that people should be considering in the next 20 days or so as we approach 2021. Note, these are my opinions only, and everyone should obviously take into account the advice of their tax advisor, tax professional, because individual facts and circumstances may vary. One of the things that we don't know about is who's going to effectively control the Senate. Some of those decisions are going to be arrived at in January of 2021. There may be certain tax code changes as it relates to that. So some of this advice we're giving from a tax planning strategy perspective is based on the assumption of some of the proposals that Joe Biden has made will actually become effective. So let's get into it. So firstly, as it relates to capital gains, Joe Biden has proposed an increase in the capital gains rate from 20% to 39.6% for taxpayers with income over $1 million. Therefore, individuals who have realized some significant gains and were considering selling in 2021 may want to consider selling in 2020. Secondly, charitable donations. Joe Biden has proposed capping itemized deductions on charitable donations to a 28% benefit for those earning more than $400,000, compared to 37% currently. Therefore, if you're going to make charitable donations anyway, it may make sense to do it in 2020 than in 2021. For example, if you give $10,000 to a charity, you get a $3,700 benefit in 2020 relative to a $2,800 benefit in 2021. For lower income taxpayers, obviously consider making those charitable donations in whichever year you guys are actually going to be impacted with the higher tax rate. Thirdly, as it relates to estate taxes, Joe Biden is proposing a reduction in the gift and estate tax exemption to $3.5 million from the current $11.58 million. Therefore, for high net worth individuals, it may make sense to give away money now in the next 20 days or so rather than in 2021. Next thing is consider evaluating your W-4 and your withholdings. If you received a large refund last year, consider reducing your withholdings. And of course, if you had to pay a large amount in last year, consider increasing your withholdings. The next one I'd say is maximize all of your retirement accounts as well as your tax favored accounts. Retirement accounts includes your 401k, your IRAs, and of course your tax favored accounts includes things like an HSA. What this treatment will allow you to do is basically defer your taxes to a later date. For small businesses and those on cash basis, you may want to consider accelerating your income and deferring deductions if you anticipate taxes to rise under the Biden administration. Also, if your income was lower due to the pandemic, you may want to accelerate collections and defer payments going into the new year. If you are a business and considering purchasing new equipment, consider accelerating those purchases to 2020 to take advantage of Section 179 deductions and bonus depreciation available this year, because it can potentially allow you to expense the full amount of the equipment. Taking these actions could be useful as we count down to 2021. Include comments below if you think there are other tax strategies that could also be useful for people to consider as we approach 2021. As always, smash the like button if you like the contents of this video and subscribe to the channel, and I'll see you soon.